Mr. Weiser, good morning.
Good morning. Good morning to Athens.
What makes you believe that this review will be concluded in due time? It never happens, no matter who is in charge in Athens.
We have had over the past 7-8 years, indeed, a large number of reviews. But all of these reviews have taken place against very differing backgrounds. No review has been like any previous review. So this review is to be judged only against itself and against the political will of the government, against the economic background against which it is taking place. And therefore I am confident that the stars are well aligned on finalizing the review in a very timely manner. Risks always exist, but I am quite convinced that they have never been as low as they are now.
Why is it so important? Is it about sending a positive message to the markets?
The importance of a timely finalization of the review, I judge against the end of this third program in summer 2018. So this review is opening the door to the end of the program, and indeed not only to the end of this program, but it is opening the door to the end of 3 consecutive programs of the Hellenic Republic.
In other words, you say that, in my guessing, the government needs a success story for the next elections, the exit of the program, or should we avoid elections?
I see it more in terms of economics. I think it is for the Greek political class to make its judgments and analysis of why this and why that and why the other. But I see it purely in terms of economics. Stability and decisiveness and predictability are a total precondition for growth and employment to pick up even further over the next year and the years beyond. All of this is also a precondition for investors in Greek government bonds to come back into the market. And when the Greek government is seeking their money, they need to have the confidence that they are investing in something stable. So stability in terms of the review also has a very positive influence on the stability of investors in Greek government bonds. And stability in that belief also brings in direct investment to Greece, and that is what Greece is most in need of: physical investment in the Greek economy. Mm-hmm. And that should come, of course, from domestic sources. Without that, this doesn't work. But it should also come from sources abroad, because I come from a country, for example, from Austria, which for many, many decades imported investment. This was extremely good in terms of technological progress, technological change, employment, but also, of course, the training that people receive whilst they are employed in such cutting-edge technology firms. So all of this together leads me to the analysis, which I think the Greek government has also undertaken: firm and decisive measures to bring the third review to an end will bring back money, will bring back jobs. There will need to be a fourth review towards the end of the program in order to unlock all of those measures which we have been discussing now already for quite some years.
We speak about a quick conclusion of the review and an exit from the program. Let us be honest, a clear exit from the program is unrealistic, a utopia. Greece will remain under strict control for years, or should I say for decades?
That is not the case. There will be a clean exit from the program in mid-2018 after the conclusion, I would presume, of a fourth review. In this context comes the discussion about debt-related measures, and there have been very, very clear pronouncements, written agreements on this issue. And then, as for all other member states, there is an instrument called post-program surveillance, which says that there is a more enhanced kind of surveillance for those member states who have been under a program until 75% of the outstanding loans has been repaid.
That will last for decades.
This is the case for Ireland, for Portugal, for Cyprus, for Spain. And if you look at the average maturity of outstanding debt for Ireland, for example, or for Portugal, this will last quite some time. But is it a program? No, because it says post-program surveillance. And as such, post being Latin, not Greek, but still it says it's after the program.
Will it be possible for Athens, Mr. Weiser, to exit the program and have full access to the markets? It sounds very, very, very optimistic.
Well, what commentators in Greece, especially, but also outside Greece, love to forget is that we have already given Greece a structure of its loans which even now already is more favorable than any loans to any government on the whole globe.
This is true.
So the refinancing needs of the Hellenic Republic are minimal compared to the size of debt. Minimal. And therefore, going to the markets in the case of Greece cannot be compared with going to the markets in the case of any other economy. And for those needs that do exist, I am quite confident that if there is a clean and good exit from the program, that access to the markets, after having been built up already over the course of 2018, will be a successful one.
But we have tested the markets a few months ago. Is there any sense of trying again with such high rates? Is it sensible?
Well, things, of course, in 2018, after a good conclusion of the third review, will be taking place against an even better economic background and an even better program background, and therefore I would expect rates to further come down. Every beginning of the testing of the markets, also for our other program countries, has been at comparatively high rates, which, as the confidence of investors goes up, the rates come down. That is quite logical.
And very optimistic.
What you have to realize, of course, is the ESM loans to Greece are at such incredibly favorable rates. Nobody in the markets gets such favorable rates, maybe Germany. So for some time to come, Greece will be paying a certain margin above, when it goes to the markets all by itself, above what it is paying for the ESM loans.
According, Mr. Weiser, to the preliminary budget announced the day before, yesterday, part of the surplus, or it's about around 800 million euros, will be returned to certain categories of taxpayers. Were you consulted before? Is there an agreement with that?
I have not been in a position yet to see any reports about the Greek budget. We have an agreement that any such measures in the context of the budget will be pre-discussed with the institutions.
Is that the case?
And I am quite sure that the Greek government and the institutions are engaged engaging in such a dialogue before the final decision on the budget is taken. Because what we have before us now is, of course, a budget proposal which has not been voted on by Parliament yet.
Mm-hmm. You will review this story about returning some of the surplus to the taxpayers.
There will be a dialogue between the institutions, the Commission, the ECB, the ESM, the IMF, and the Greek government on this issue, and I am quite convinced that this time around the dialogue will be a good one and the result will be mutually agreed. I will not prejudge what the result will be.
At the same time, Mr. Weiser, tax revenues are falling short. Can you exclude the possibility of extra fiscal measures for 2018?
For 2018, frankly, I have no view as of yet on what the economic developments will be. We have to await what the verdict of especially the Commission on this issue will be.
Mm-hmm. The arrears of the Greek government to the taxpayers have increased by 600 million euros. Will that hinder the payment of the next tranche?
I suppose that you're referring to the 800 million which are still available until end of October.
Yes.
The ESM is still waiting for data to show that with the last tranches, with the last disbursements, the arrears clearance has actually taken place as was agreed. And if this data is forthcoming, then the 800 million would be transferred if it is before the end of October.
Mm-hmm. Last question, Mr. Weiser. The IMF asked for very strict stress tests for the Greek banks. Do you think the issue was addressed after the recent announcements of the European Central Bank?
I believe that now we have a good solution. Next year there will be stress tests for a wide range of banks all across Europe. And in this context also of Greek banks. So this is an issue which is taking place. This is a measure which is taking place all across Europe. And I understand that the provision of data from the Greek banks will take place even faster than for some of the other banks, so that the results are available well before the end of the program. And as such, there is equal treatment across Europe and especially across the euro area. And therefore, I am quite confident that this will be done in a stability-oriented manner and will be show hopefully the right results.
Thank you, Mr. Weiser. It was a pleasure.